Good morning and welcome to the opening bell. I'm Nikki Mirchandani and I'm here to take you through the news and cues that could impact, well, your entire trading day to begin with. A couple of things that are right now moving in the markets. If you talk about how the market is stacking up overall, you look at the markets, they're looking for they're set for a flatter start coming in on the last day of the financial year 2023. SGX Nifty, that has indicated a muted start for the broader index. US stocks, they were in the range-bound sort of deals on Friday. Yesterday. And banks and technology shares, they remained flat. Overall, the traders remain at the sidelines in absence of clarity from the US regulatory agencies on struggling banks. And in fact, right now, most of the Asian markets, they've been trading higher. If you talk about the FIIs and the DIIs figures, both of them have been buyers out there. So that's a huge positive coming in even for the FIIs. They've been holding out. They've bought in shares worth around 1,245 odd crore, and DIIs, the purchase, the quantum has narrowed down, but nevertheless they continue to purchase. It's to an amount of around 822 odd crore. 4 IPOs, they've hit the Lal Street on March 31st as this year draws to a close. And in fact, FTSE has held off adding India. It's added South Korea to key bond indices at this point of time, but it's held off India as well as South Korea to the key bond indices. So that's one big development. Also, a bit of upgrade coming in for India to equal weight from Morgan Stanley Asian equity strategies out there. So that's a bit of incrementally positive coming in for the Indian equity market. But let us get going and discuss some stocks and strategies today with Hemen Kapadia of KR Choksey. Good morning there.
A very good morning to you, Nikki. Thank you for having me.
Pleasure. Hemen, how are you looking at the markets? It's the last day of the financial year. It's been a tossy-turvy, rather volatile year where we've seen a lot happening literally. But what is your strategy right now for Nifty and Bank Nifty, especially for Bank Nifty, which has been gaining for the last 3 consecutive sessions?
Well, you're absolutely bang on, Nikki. It's been a volatile year. We've gone nowhere. Frankly speaking, we peaked at around 13th October 2021. And since then, we have been corrective. We did make a slightly higher high, but the overall structure remains corrective. We had a phenomenal move from 7,500 to 18,800, 18,500 or so. And now, the thing is, we still haven't got out of the correction. The correction continues. Coming back to Nifty, Nikki, we've been between 16,850 and 17,200 for the last almost 9 or 10 trading sessions. Now the picture is improving just a wee bit, but we need a close above 17,200 to make further upside. Coming back to Bank Nifty, yes, there is relative strength vis-a-vis the Nifty, Nikki. The level to watch is 40,074. One gets a feeling that we should be moving slowly towards 40,500 and 40,800 over the next week. Yes, we have a truncated week. We have 2 holidays. So action might be slightly muted in the sense people might prefer to not participate too much. But yes, the Bank Nifty does look better. And it looks as if a further upside seemed like a distinct possibility, especially above 40,074.
All right, so 40,700 especially. So you see a bullish trend overall playing out for Bank Nifty because of the 3 consecutive sessions rally. You think sustainably, if Bank Nifty stays about that 40,000 level, then we can probably cross through maybe a 42,000 mark for that matter? Or you think right now the charts, at least for the near term, indicate a very bearish trajectory for Bank Nifty? How are you looking at it, and what's the strategy then one can look at for the new financial year as well?
Okay, I think things are improving, so I wouldn't say bearish, Nikki, as far as the Bank Nifty is concerned. And yes, like you said, 40,074. This is crucial. I believe that should get taken out either today or on Monday. And if that happens, 42,000 is a possibility. I'm not saying no to that, but currently that seems slightly far away. I would prefer to take one step at a time, Nikki. 40,500, 40,800, 41,500. These few levels, I think we need to tackle them one by one. But yes, having said that, we've been down for 16 weeks, Nikki, as far as the Bank Nifty is concerned. 16 weeks. Okay, we've declined, we've corrected, we've retraced the rise, but it hasn't gone down so much compared to the time. So a bounce is positive, and like you're saying, in the new month and the new financial year, I believe April should be better than March as far as the Nifty or the Bank Nifty is concerned. At least few weeks or at least maybe the whole of April, I think, with ifs and buts, a few ups and downs, should gradually be positive, and we should be higher than where we are in terms of March, Nikki.
All right, Hemen, quickly, three trading profitable ideas out there for the viewers along with the levels before we quickly address the stocks and news, please.
Okay, firstly, a buy call on Axis Bank at 840, stop loss 820, target 880. Oversold, downside limited, resistance at 860, 820, bounces around the corner. Second stock is ICICI Pru Life Insurance. This looks extremely positive. The weekly charts have bottomed out. The mechanical indicators on the daily chart have signaled a buy. So buy ICICI Pru at 425, stop loss 410, target 455. All our trading calls for 5 to 7 trading sessions max. Lastly is slightly longer term, Dr. Reddy. Intermediate uptrend, higher tops, higher bottoms. All the oscillators have signaled a buy. Stock looks good, on the verge of breaking out from a consolidation phase. So buy Dr. Reddy at 4540, stop loss 4380, target 4700, Nikki. 3 buy calls.
All right. Also, the theme for the entire day today is expected to be pharma, and there are the levels coming in for Dr. Reddy. But we'll quickly address the stocks and news. In bunch of stocks that we'll be addressing this morning would include something in the likes of Lupin, JSW Steel, Bharat Electronics. First, let's address Lupin. Now, USFDA has issued a Form 483 with 10 observations for the Pithampur Unit 2 manufacturing facility. The facility was inspected by USFDA during March 21 to March 29th. Remains to be seen how serious are these observations that have been noticed thus far. And also, let's talk about Alembic Pharmaceutical. That's again a second name on our list this morning, pharma name. It has received a final approval from USFDA for its ANDA, Brimonidine. That's one of the drugs where they've got this. It's a therapeutically equivalent to the listed drug product, Alphagin, which is technically a solution indicated for the production of elevated intraocular pressure in the patient. So keep an eye out on that one. Also, JSW Steel, that has declared as a preferred bidder in, preferred bidder in the auctions for 3 coal mines in Chhattisgarh and Jharkhand. So do keep an eye out on this one as well. The entire metal pack right now has been doing well. Some volatility has been played out as expected in the commodity cycle, of course, but overall the trend at this point of time is holding up for the commodity stocks. Bharat Electronics, also the defense name, have been doing well, right? We've seen significant amount of traction and the order win coming in for all the defense name and Bharat Electronics in specific. Now, we've seen a huge order coming in from the Ministry of Defense. Yet again, it has signed in 10 contracts which amount to around 5,498 crore with the company for Indian Armed Forces. So that's again an interesting one. If you look at Bharat, the electronic overall on YTD basis also has done typically well. Next in the list that we're talking about is Quess Corp. We've seen the significant traction coming in on the Wednesday deals for this one. A sharp up move before it finally cooled off. Fairbridge Capital, they have bought in nearly 4.4% of stake in the company. The stake was bought by the subsidiary of private equity investment firm. Of course, the selling side, we have a lot of sellers out there, but Quess Corp typically has done, sharp intraday volatility, if you can see in the previous close. And Fairfax is one of the buyers out there. So do keep an eye out on this one as well. Well, these were the bunch of stocks that we'd want to address, but I'm going to go back to Hemen and also ask him about how does he look at something like a Lupin right now. And also, I think he has a bullish call coming in for the entire IT and the pharma basket, if I've got that right, Hemen.
Yes, we'll start with the Nifty Nifty Pharma Index, Nikki. We've seen a short-term bottom coming in. The sector has been oversold for some time, and we have now turned the corner. The oscillators like the MACD, RSI, stochastic on the daily chart have all signaled a buy. There's a higher top, higher bottom formation which has happened as far as the Nifty Pharma is concerned. So yes, a short-term bottom in place. I believe this might get converted into something positive on the weekly also. So pharma as a sector, if you were to take a couple of weeks or maybe a 2-3 week point of view, one can take a bullish call. The second sector is the Nifty IT index. We tend to take cues from the Nasdaq quite a lot, but the mid cap IT, maybe like an Emphasis and all, have underperformed, have gone nowhere. It's the bigger ones which are showing the first technical green shoots, Nikki. If I look at the Nifty IT index, we've seen an upward key reversal coming in yesterday on higher volume. I believe a turnaround technically is around the corner. We've been down for 7 weeks in a row, Nikki, as far as the Nifty IT is concerned. And if you look at Infosys, if you look at TCS, things are just beginning to look a shade better. Infosys has stabilized, so has TCS. The indicators are turning positive after reflecting positive divergence. So one gets the feeling that pharma is in the third gear, but IT, especially the mainline stock, should just get into the first gear in terms of an upside, Nikki.
Sure. What I'd also like to address is the South Indian Bank. The shares are in a grip from, after the managing director and the CEO, Murali's impending departure. Now, do remember the fact also that the stock has almost trebled between June and December last year. But there was a significant knock which came on in the shares on the Wednesday session. So that is that is also remains to be seen. And there was this. Of course, we've spoken enough and more about Lupin and another turnaround story that could take a knock, especially after the USFDA report that has come in with 10 observations. Like we said, how much serious are these observations? They still remain to be seen. But overall, do keep an eye out on the pharma basket in trade today. And we're going to also address in the markets open at this point of time. Where we're seeing, if you're looking at a muted start coming in for the markets, at least on the final day of the financial year. Nifty 50, there we have a positive start. It's 0.75% of gain, 17,200 mark. That has been taken over. It's rather a very, very positive start coming in for the Indian equity markets. Asian shares, of course, were also doing well. So this is in sync with the neighborhood shares, if I might just say. Bank Nifty index, let's talk about that now. 0.75% of that one also, 40,000 mark, 40,200 level rather. If the bank index now, Bank Nifty sustains about that 40,000 level, we could be looking at some amount of bullish net right now coming in for that one as per most of the technical analysts advise around. In terms of the broader index, mid-cap index, that's also showing some traction. 0.75% of gains coming in on that one. And the small cap index, that's holding up well for you. Now, small cap index technically has been an underperformer entire financial year. But for today, the last final day, almost 1% gains coming on that one, outperforming the larger counterparts. Let's address the sectoral indices also. Nifty IT index is holding up with gains of around more than 1.5%, close to 1.5%. Metal index has been shining bright for you. Early morning means 1.5% gains coming in even for the metal index. Pharma index flattish but with positive bias. No complaints even for the pharma index out there. If you talk about the market breadth, that's also holding up. 43 advances versus 7 declines. In FMCG index, that has been holding up, 0.5% gains coming in even on that one, so to say. And auto index has been holding up too. 3.44% of a gains coming in entirely on the auto basket. Overall, the trend, market breadth is pretty positive. Realty index is also holding up. Close to 1% out there. It looks like at least the final session of the financial year seems to be the one with the positive end. But let's actually also address the top gainers and the top losers on the Nifty 50 index. Adani Enterprises, Nestle, Reliance. These are the top 3 gainers that we have on our list, the top gaining list. And if you are addressing something more than that, Adani Ports, Tech Mahindra, HCL Tech, that has been also doing well. So overall, ICICI, TCS and Axis Bank also is been holding up. They're one of the top gainers that we have on our list today. And also, Asian Paints, however, is down and out, and DV's Lab is something that you need to keep an eye out too. Also, if you could address the stocks and new stocks, right? Lupin, something like a Lupin could be seen, something like a JSW Steel can be seen. Dr. Reddy, which was also Hemen's, suggestion out there, recommendation. So also watch out that one. Lupin specifically, because there was this huge knock which is expected to come on the stocks after the 10 observation which have been thus far approved, or rather come in by the USFDA with the Sritapura plan. That needs to be seen, right? Nestle India, however, is just shining bright in the trade today. Now, do remember the fact that the board, now there you have Lupin, down and out by more than 3%. Nestle India on the other hand, there is an interim dividend news coming in, or where, because of which the stock is rather doing too well. There is a board meeting for the interim dividend out there, because of which you're seeing the shares. The board will rather consider an interim dividend on April 12, along with the first quarter results. April 12 is when the company will report in the numbers, the impact of El Nino, if at all, how the outlook is stacking up for the entire FMCG basket. Interim dividend announcement has kept the stock pretty much positive right now. We're looking at gains coming to an extent of 2% odd. And for Lupin, like we rightly indicated, that we saw a knock coming in to an extent of 3% odd. So overall, right now, pharma stocks, Nifty Pharma Index overall, it's expected to be in limelight per se, but do keep an eye out even for Reliance, right? Support is coming in from Reliance Industry today. That is something which is heartening right now for the markets. But Hemen, I'm going to quickly come back to you and ask you about RIL levels, and also what do you make out of the IT names, if at all?
The easier one is RIL, Nikki. RIL is not a company, it's a sector in itself. It's fantastic, it's huge. I've been a big fan of RIL since 30 years since I my entry to the stock market. Not only in terms of market cap, Nikki, market sentiment wise, Reliance perks up, market perks up. I think that's very apparent today. If you see, Reliance has been sort of sober, not doing anything. And today, Reliance perks up, market open with a gap up. We are at 2293. We've gone to 2296 intraday, Nikki. 2293 is important resistance. We close about 2293 today. It opens the doors for at least 100, if not a 150 point upside as far as Reliance is concerned. Has made a base between 2180 to 2293 on the cusp for breaking out. But yes, we need these levels at the closing. But Reliance does look promising. And if Reliance turns, Nikki, like I said, sentiment-wise, rated-wise, the entire market turns. And if the bank Nifty is participating like it will, if you see over the last 2 months, whenever there's been a move of 500 to 700 points, it's been Reliance and IT, Reliance and banks, Reliance and banks. So it's basically Reliance who sort of makes or breaks the market, and Reliance now seems to be turning positively.
All right, that's the word coming in for Reliance, but also let's chat about Nestle. It's been one of the top gainers, interim dividend announcement out there. Vedant Fashion, that was also one of the initiation report which was reported by MOSL, which came over yesterday per se. What do you make out of that? Your immediate levels coming in for Nestle India, because the stock has been holding up with gains of more than 1.5% out there early in the morning. How do you look at it?
Third week in a row, Nikki, I believe there would have been, this somewhere seems to have been built into the price. We've seen a gap up, 19,800 is strong resistance. I do not believe that will get taken out at the first attempt, but yeah, the short-term picture has definitely improved. Higher top, higher bottom, indicators positive, above 55-day exponential moving average. Yes, but 19,800 is where I'd be slightly cautious. It's not a very liquid stock, but the short-term setup has distinctly improved, Nikki.
All right, Hemen, we'll leave it at that. Thank you so much for taking out the time and speaking to us this morning. All right, it's that part of the show where we usually talk about the fundamental story, and this being the final day of the financial year, we intend to give you a little lowdown of how the performance has been, which are the bets that can look positive going forward in the next financial year. And to join us to take the discussion forward is Jigar Mistry, the co-founder of BUOYANT Capital. Good morning there.
Good morning, Nikki. Thank you for inviting me to your show again.
Pleasure is all ours. I'm going to start off by what exactly are you now looking at for the next financial year? Any sectoral bet per se? As a theme, maybe it could be the small cap index, or maybe overall for the larger counterparts. Where do you see the traction building up here on?
Right, Nikki. So, since this is the last show of the year, so to speak, fiscal year, let me, take a step back and look at what is sort of leading to this India performance the way we have seen. Right. So if you sort of look at whenever in central banks start raising interest rates, right, three things happen. Obviously, the economy cools down. We are aware that happens. Consumption slows, investment slows. That is apparent. The second thing that happens is that the countries with stable currency start to attract a lot more capital, right? And USD being the stable, historically the most stable of all, uh, foreign investors usually sell out the riskier asset class that includes emerging markets, and India is an emerging market, so FIs will sell. The third thing I think which a lot of people don't appreciate is that there are accidents which are lying in wait. The interest rates increase. That's not a one-on-one correlation, as in zero becomes one, one becomes one and a half. Nothing has happened doesn't mean one and a half to two will not break the bank. And I think that is what has transpired. In 2008, it was the subprime crisis. Currently, what we are witnessing is how the treasuries of a few banks in the US miscalculated the extent of the securities that needs to be in HTM, and two, the sort of losses they are sitting on, as in everybody thought this is a transitory rate hike and will not be required to recognize this. In this backdrop, right, and assuming that things around the Russia-Ukraine conflict have more or less stabilized, Indian market had two distinct phases, right? One was CY22 when the entire global markets were down. So I think Nasdaq was down 30+%, S&P 500 was somewhere around 20%. India was sort of up 4%, which was an aberration in and of itself. But part of those gains have been reversed in the current sort of calendar year. So just the end of 3 months, and you have seen Nasdaq rally. DAX was near to its highs yesterday, and Nifty has been sort of flatlined down a little bit, maybe. So I think some amount of gains have been given up, and I believe it is on account of the second factor which I mentioned rather than the fundamental factor. The second factor, which is that FII start selling everything that they think is risky, we are extrapolating that to mean that India might be in some sort of fundamental problem, which I don't really think is the case. Right? I truly believe that these are the flows that are driving the markets lower. Fundamentally, if at all, are positive, and let me list a few. The first one being, even if you assume that US dollar is stronger, which results in lower commodity prices and outflows, right? So two sides of the balance sheet. Even if that were to happen in the exact proportion, you are still looking at a better quality BOP, right? Because crude is a revenue expenditure for India, whereas FII is a capital inflow, FII/FDI. So if crude is lower and FIs are selling, let's imagine in the exact same proportion, the BOP will be neutral, but the quality of the BOP, in my opinion, will be a lot better. Secondly, I think
Just
for
hold that
Indian
thought.
banks and
Hold that thought for just a bit before you address about the banking story, because we need to first highlight whether you expect the small cap index to do well or no for the next financial year. And of course, we'll go on to talk about how different banking system can do and how differently it's, whether it's decoupled overall from the US banking system, if I could use that term in the first place.
Right, Nikki. So coming to the indices first, I do think so, right? So if you look at, say, 20-year picture, the Sensex has returned something like 17% CAGR, small cap has returned like 19% CAGR. 2% is a reasonable difference, but it's not heaven and earth. If you actually but look through, that's like a 20,000 feet view. If you start zooming in, you will find that these performances don't come exactly in synchronization with each other. So if you were to take a period, say like December 17 to March 20, during that time, the Sensex was down something like 12% and the small cap was down 50%, right? And then the recovery happened, small cap outperformed in the run up from April to until I think October 2022. And I think part of that has been reversing. But if you look at from, say, January 2018 highs, the index has not really moved. So it's been a little more than 5 years now that at the index level, small caps have not really moved. a lot of quality companies within that actually have started reporting fairly decent numbers, much better than they were 5 years ago. So my sense is that, and that typically happens, when the liquidity dries out in the market, you don't really find a lot of these names doing well. But my sense is that from here on, over the next year or so, small cap and the good quality companies in the small cap should be on our radars to go forward.
Specific names, Jigar, that you'd like to mention within the space, where the valuation looks a little attractive and the earning potential seems to be a lot more higher than the peers?
Right. So we, just a caveat here, we run a fund. My money is also managed by the fund that we run. So you can assume that any names I take, we have a financial interest. We have an interest in those names, right? But a few companies that stand out. So first, there is a company called Sudarshan Chemicals that is very interesting. It's a pigment manufacturer, third largest in the world. If you look at the stock price, it might appear that a lot has gone wrong. But our sense is that, with the talk to BASF and Clariant sort of doing some sort of a corporate arrangement, the space opens up for a company like this. Europe is a very emerging market for a company. And our belief is that this company could actually do a lot better over the course of next 2 years or so. We have been owning it for a while now, I think in excess of 3+ years, but this is a very interesting name to go about. The other company that we do own is a company called Archean Chemicals. It makes bromine, about, I would say, 8,000 crores market cap. It's actually the largest bromine manufacturer out of India. And if you look at the regions that supply bromine in the world, something like Red Sea or China, the production has been dwindling. And for Archean, it would more than double to something like 48,000 tons. The price of bromine, because there are such few suppliers, does not really deviate a lot. So whatever growth in capacity comes will eventually get transferred into higher profits. And the stock trades something like 10 times a couple of year forward earnings. So that's another company. We do own it for a while now since listing, and I think there is a lot of interest there. The last company in the small cap space that we like is a company called, say, Satin Credit Care. They are a typical MFI, microfinancial institution. MFI as an industry has gone through several cycles, I think 2-3 years of bad cycles. And I think most of that has settled down now. So it was initially Amphan, then Assam government, then the sort of social moral hazard that emerged out of that action. But this is a company which at I would say 1,000 odd crores market cap already does something like 230-240 crores of annualized profit. That could close to double over the course of next 2.5 years. And this is one of the sort of smaller ways to, or rather a way to play a small cap into that segment. Okay.
So for just a follow-up question on Satin Credit, one that you just mentioned along with Sudarshan, these were the two stocks. Of course, I was just checking the promoter holding and the sales growth out there. The promoter holding has been declining, at least for Sudarshan Chemicals out there. And also the sales growth hasn't been quite really impressive for the last 5 years, if I may so say. Have I got that right? Do you expect a turnaround coming in even on the top line performance of the company? And the decrease in promoter holding isn't a cause of concern for these two?
Right. So let's address the first question. The sales growth has not been very, very strong. I think they've instituted something like a 1,400 crore capex, and most of that capex has been, just getting commissioned. So what initially happened was that, COVID happened and they couldn't finish their facilities on time as we had expected. Then the approval took a much longer time. I think most of those have been settled now. So our sense is that whatever sort of lag in growth that we have been seeing, we might see a much better sort of recovery over the course of next 2 years. So yeah, promoter holding, I don't really have a comment beyond the point on that. So it's a shareholding issue. They still own a reasonable chunk. So not really much to say there.
Okay, the promoter holding, at least, for Sudarshan Chemical, has decreased over the last 3 years to an extent of minus 16.5%. That's an incremental piece of information. Of course, the fundamentals have been taken into perspective. But Jigar, let's discuss. Last question that I have about for this entire discussion is, how do you look at now the banking theme overall, how decoupled it is right now from the US market, and also the sectoral theme that you feel would do well going forward, apart from, of course, the small cap 2-3 names that you've suggested thus far?
Right, Nikki. So yes, sectorally speaking, I think banking is among the best placed. Traditionally, we look at banking from a 4-cycle standpoint. One is the credit growth. Secondly, your NIM cycle. Thirdly, it is the credit cost cycle. And fourthly, the valuation cycle. Right. So credit growth has been reasonably good past 3-4 years, but especially over the last year and this year, predominantly sort of driven by the retail sort of growth. NIM typically expands when your interest rates are on a high, and that compresses when interest rate peaks out. So I think the markets have been a little bit worried that we have already seen the peak of NIMs. Last quarter, when they reported the numbers, they were at like a 5-year high for most banks. Thirdly, credit cost, I think we have to segregate between pre-2015 and post-2015. Pre-2015, our sense is that there was a lot of evergreening which was going around. And that has stopped after, the RBI forced them to recognize the sort of bad loans in one go. That led to, a lot of bad loans being recognized from 15, 16, 17, settled down 2018 onwards. And now they are really, really benign. So, even 2020 sort of COVID happened and banks didn't suffer a lot, given the sort of size of the problem. A fourth valuation cycle, people have played differently. So for banks like HDFC or Kotak, which have always managed a very clean book, they were already trading at a high valuation, and they have not done really much over the past 3 years. But ICICI Bank, Axis, etc., caught up on. So I think those are happening reasonably well. Investors also chose to sort of play the PSU banks, and that rally happened. My last point on this is that whatever happened with SVB or Signature, the Indian banking system is very, very different. We don't really have that high an exposure to GSEC. And even the book that the banks sort of classify as HTM, that is entirely duration matched. So, although some brokers have calculated that the impact on the book will be something like 6 to 15% higher for PSU banks, my belief is that if you look at the duration matching of your liabilities and not just the HTM book, then most investors would find, and they would report this in the March annual report, that things are not as bad as the market is fearing. So I think with all the 4 cycles getting aligned, we are really in a very good place as far as the banking sector is concerned.
Sure, that's the word coming in. It's not as grim as what is being painted, at least for the banking sector. But Jigar, thank you so much for taking out the time and speaking to us this morning.
Thank you, Nikki.
All right, with this, it's a wrap and goodbye from the entire team who puts this piece together. Thank you so much for watching. Please do post your feedback for us in the comment section below. Follow us on the link at the bottom of your screen. And for rest of the updates, stay tuned into moneycontrol.com and Moneycontrol app.